Alright guys, we are back today at it with another video guys. Another video today, and I want to quickly go over what I did for today's trade on Swiss franc JPY and just a little breakdown on what I took, steps I took to enter this trade at all. So what you're looking at now is we're on the 5-minute chart, but I'm actually going to show you what I did here. So if we go in the chart and we look here, I had an accumulation, if you're familiar with Wyckoff, I had an accumulation / demand zone here at this order block. Okay, so I had one right there. That was my order block, that was my demand zone. And so basically I had an entry there, and I entered here, my stop loss just above the order block, because if I'm taking a trade here and I think I'm going to be reacting off of this order block, I don't need to have a stop loss that's all the way down here. If the whole point of me entering this trade in the first place is to enter off of what's called an order block, which is limited in space, okay? So I don't need to have a stop loss here if I'm entering here. Maybe some people want to have it on this one, but for me, I'm really specific, and so that's just how I am. If you don't believe me, that's fine. I don't give any amount of a percentage of a shit at all. But yeah, guys, so we're going to actually go back out here on the 15-minute chart, and we're going to zoom out here all the way out on my mouse. Then we're going to go to the 1-hour chart, zoom out all the way with my mouse, okay, so I can't zoom out anymore. And then what I did to enter this trade is I identified where the market was going, okay? So I had market structure on a higher time frame, and I noticed here, yes, the market didn't come all the way back down to here. It didn't come down here before going back up, but that's fine, because the reason why I entered up here before letting it fall down here is because I noticed once I had market structure, okay, so I had two higher highs and 2 lower lows, and they're all valid. So I had 4 pieces of confirmed market structure. The next step I did was I zoomed in and I noticed a break of structure here and some demand, okay? Plus, I noticed the liquidity right here on this green line here, okay? On that green line. And the reason I didn't enter there is because it was above my, it was beyond my R&R limit, okay? So this was about 82 pips, 8 pips stop loss, 82 pips. It's these trades aren't hard and difficult and surprising as you think they are. When you're actually trading smart money, they become normal. But so yeah, so I identified market structure, and then I zoomed in, and I noticed I had some break of structure, which is here on that red line, and some demand. Now, when I had that demand, when it broke structure here, it showed me all these available points of interest. Now, points of interest are areas that I'm particularly interested in trading. So for me, points of interest can be order blocks. Points of interest can be demand zones. Points of interest can be fair value gaps, anything like that, okay? And so those are areas that I enter off of. Like here, this gray box here, this point of interest was a fair value gap, okay? So the gap was this candle wick and it got filled and it went up. So sometimes the price isn't going to come all the way down here to, like, let's say this gap of unhealthy price action here. Sometimes price won't do that. Sometimes price will just come back up and go to the most valid one before going back up. And what I also noticed is, so what I trade is I trade Wyckoff and I trade supply and demand. I don't really tell anyone what my Wyckoff is because you guys aren't going to understand it. I already know it. It's just too difficult to explain. You're not going to understand it. I'm not going to explain it here on YouTube. It's going to take me like a long time to explain to you. So I'd rather show you guys supply and demand. And if you understand Wyckoff, that's great. So basically, I had another break of structure here. Okay, after price hit that previous gray box here. Okay, so we had that previous point of interest that I showed you before. This gap here that I showed you guys here a couple minutes ago. Now I'm zooming in, and we had another break of structure here on this black line. So let me just make it red so it can match. So we had another break of structure right here, leaving some more unhealthy price action. And then what I noticed is when you're trading Wyckoff, schematics always happen at your point of interest. So at your gap, at your demand zone, blah, blah, blah. So I was trading an accumulation here. We had a little bit of consolidation. And then we had a break of structure here. We had expansion. Then it left us this order block. I entered on that order block, and I took profit here above at this level here. I didn't do it on the equal highs and lows because it went above. It was over. It was, yeah. The risk to reward ratio was 13 to 79. I like to keep my risk to reward ratio at a maximum of 10, or else I'm too greedy. So that's why. I mean, technically I went 10.3. That's technically too greedy, but you know, it's not too high as long as it's not 11. But that's usually my risk to reward ratio. Sometimes it's not always 83 pips. Most of the time, to be honest with you guys, it's like 40 pips or 50 pips. This was just a lucky one. I'll get these like maybe twice a week. But yeah, guys, I only trade 4 times a week actually. I don't trade a lot. Sometimes 5, and the reason is because to get trades like this doesn't always happen every single day. You're not gonna get on the chart and wake up and then just see a trade like this, okay? And just see market present a perfect setup. It usually takes time to present itself. Like this schematic right here, this consolidation took time to build up before I can even enter this trade here. Okay, so that's basically how I enter. This first step you want to do when you get on the chart is to identify your market structure. So you can use the 1-hour chart, you can use the 4-hour chart for higher time frames, and then with the other thing I do after that, the second thing is I identify my point that I'm interested in. So that is my supply zone, my demand zone. And so in this situation, I identified my market structure. Step 1, okay, I had 2 highs, 2 lower lows. Step 2, I looked for my point of interest, and I was interested in getting in a trade. Why? Because I saw a break of structure here that I noticed on this black arrow, okay? And then once I saw that, that made me interested in looking for setups because I saw a break of structure, okay, with demand, knowing that I'm in bullish market structure, and it tapped into this liquidity, confirming that the market's going to go up. Okay, so I didn't actually have any fundamental data to tell you guys to complement this trade like I usually do, but for this one, I could just tell based off the supply and demand, based off of reading the candle, because the bigger the candle, the bigger the move, and also volume. If you study the Wyckoff methodology, volume basically reflects the law of effort. The law of effort in the market. Okay, so back here in this consolidation, we had high volume points. Okay, so yeah, guys, so that's basically all I did is I identified my structure. I found my point of interest, which was these fair value gaps. This unhealthy price action was my point of interest in all this demand, and then I found an opportunity after a break of structure. And when you're buying, guys, when you're taking buy trades, you always want to make sure you buy at the bottom of your trading range. So let's say this counts as the bottom because if we zoom out here on the 1 hour, this is a bottom here. We have the bottom plus a break of structure. Okay, so if this was going to go back down all the way down to here, guys, I wouldn't. I'm pretty sure it wouldn't have left that big ass demand right there. And sometimes it can still do that, but that's what gave me confidence that let me know the market was going back up. Was seeing that demand. Okay, and if the market was really actually going down, I think price would have came up to this original supply zone here, okay, and then I would have thought it would have come up to here and then go like that. I don't think it would have came up to this exact point, leaving equal high and low and then going back down. I mean, it could have, but for me, I'm so intuitive with this. I use logic and I use intuition, and so that's how I trade. But yeah, guys, that's all I did. I hope this video helped you. Peace.